But importantly for our events this morning, I get to eventually ask questions of our two speakers. So we should have hopefully an enjoyable time this morning. A little different than how some of the other Business Week events are going to run. So let me run through this really quickly with you. Most of you are probably familiar with most of this, but let me do it anyway. All right, so the typical Business Week events start on the hour. So say like 9 to 9:50, 10 to 10:50. For those of you who may need proof of attendance, those get handed out at the end of the sessions. So the idea is that really all the sessions run at the same time, so you can easily slide between sessions. We have a unique opportunity this morning with our two speakers that they said, well, why don't we take our 9 o'clock session and our 10 o'clock session and combine them so that we can tell some stories together and maybe go a little bit more in depth on some things. So this one's a joint session and it's going to run from 9 till 10:30. But we know that a few of you may need to slip out of here and you don't want to be super awkward about it. So at 9:50, we're going to kind of try the transition from our two speakers talking to each other and start to get some questions from y'all. So this is a subtle setup of my ask for you. That means we are going to need some questions from y'all for the 9:50 to 10:30 part of it. So we'll put up a cell phone number on the screen that you can text questions to. It is not mine. So if you're upset with me about something and want to blow me up at 2 o'clock in the morning, don't text that number. You're going to get somebody who does not deserve that. So that's our plan. So if you've got to jet out of here at 9:50, don't worry, we'll create a little commotion so you're not the only person getting out of here. So with that being said, I should zip it and we should get our speakers up here. So our two speakers this morning, in no real order other than how they're listed on the Business Week website. So we'll start with introducing Derek Bomar. So Derek went to UNCW, left here, went to Wake Forest. He got an accounting degree, but we still love him anyway in the Department of Econ and Finance. Worked at PricewaterhouseCoopers for a while. Went to Goldman Sachs, has hosted groups of your peers and students at their New York office, and just recently moved to the London office and said, no, I'm in for Business Week. I'm coming back. So if you would, please give a big hand for Derek. Our second speaker is Kevin Gould, who runs Kombo Ventures. I don't want to give you a super long bio on him because I want him to tell this story. But here's the way I sort of think about Kevin. Kevin is the guy who shakes a hand, remembers a name, never forgets a face, and that has led to all kinds of opportunities as he's gone from talent management to venture capital and deal flows and all kinds of crazy stuff. So hopefully we can hear a little bit more of that story. A wide array of companies, Glamnetic, DraftKings, all kinds of stuff. So I have no idea how you claim to be an expert in any of this, or if you do claim to be an expert, but he was a marketing concentration while he was here and a leadership minor. And now he says, oh, I've actually had to learn some management and I'm really enjoying the finance. So a little plug for econ and finance. With that, maybe I'll zip it and turn it over to y'all. Can you start by just correcting what you want on the record about your bios, history, etc., and we'll let you all just chat.
Is this on?
I think we hear you.
Okay.
Got him?
Perfect.
There we go.
Oh, yep. Okay. Well, the only thing I'd correct is that clearly we are two of the most high maintenance speakers that you guys have on campus. If it takes 5 minutes to get us introduced and explain how this is going to work. So in any case, we appreciate you guys making the exception for us. So I think, so the background between Kevin and I, we actually went to school together 15 years ago now, and we kind of just wanted to have a casual conversation, talk about some topics that we think would be very interesting for you guys. And if it's okay with you guys, we'd like it to be interactive. So feel free to jump in with questions or follow-ups or things that you want clarified or for us to deep dive into more. Anything you throw in?
Yeah, no, I mean, look, it's really great to be here. So I haven't been back to UNCW, I think, in 10 years. And so the campus has changed a lot. Derek and I split an Airbnb last night, so we got to catch up. And I was like, Derek, what are you wearing? I was like, you get a suit up and make me look bad. So he, he suited up, and he always used to one up me in college. So he still got me. But yeah, maybe I'll give a quick background on myself, and then maybe Derek, you can give your background. Quick high level, grew up in Greensboro, went to UNCW, graduated with a major in marketing and a minor in leadership studies. Wasn't really sure exactly what I wanted to do when I graduated, but I knew I wanted to be in the entertainment business. So I moved to Los Angeles in 2008. And I eventually landed a job in the mailroom at this big talent agency called WME. So I don't know if anyone's seen the show Entourage from like back in the day, but basically when you start in the mailroom, it's like the ground floor of the entertainment business. WME represents all the biggest actors, writers, producers, non-scripted TV shows, and then you become an assistant, and you're basically shadowing an agent, right? So I worked for multiple agents at WME that at the time I was working with a lot of like the big actors, like the young Hollywood, like the Taylor Lautners of the world of 10 or 12 years ago, right? Or the Glee Kids or One Tree Hill. And I did that for 3 years. And then while I was at WME, I realized, one, I hated reading scripts. So I was like, this isn't gonna work. I don't wanna be an agent because I can't be a talent agent if I don't wanna read scripts. But what was really interesting at the time that was coming about was the influencer economy was just starting, right? So like YouTube was just popping up 12 years ago, influencers coming about. And I kind of realized I had this, kind of like upper hand where a lot of the agents at WME didn't really understand the influencer space. I was like, I think there's kind of an opportunity here. So I left WME with one other person, and we ended up starting a company at the time that eventually morphed into Kombo Ventures. And for years, there were two sides of Kombo Ventures. One was managing talent, YouTubers, influencers, and basically applying what a traditional talent agent was doing, except on the influencer side. And then the second piece of the business was I realized there was a disconnect between Silicon Valley and Silicon Valley companies and the entertainment world. And both sides didn't know how to talk to each other. So for a long time, I was the guy that was the bridge between the two worlds. So I'd work with these Silicon Valley companies and connect them to the entertainment world. And the business model was a combination of take a retainer, like a consulting fee. I take sweat equity in the companies. And then I realized, whoa, these companies that I'm consulting are really hard to get into as an investor. And so I would not recommend this to anyone at the time, but I started taking all the money I was making, like literally all the money, and throwing it back into angel investing in these companies because I thought it was a really unique opportunity. Did this for 6-7 years. And then I wanted to really start building my own brand. So around 5 years ago, started a couple consumer brands that were leveraging the expertise I had on the influencer side. So kind of cut to today, have a holding company. We own 3 different brands. One is, they're primarily beauty or beauty adjacent. One's called Glamnetic. It's a eyelash and nail business. And we started online and then we moved into retail. So Sephora, Ulta, Target, number of other retailers. What's to remind you to take the poll? Oh, by the way, for maybe any beauty users, have any of you guys heard of Glamnetic? Cool. So it's like we sell nails, lashes, have another women's hair brand called I&H Hair. And we've had that for 5 years. And then I started a candle and fragrance brand with these guys, the Dolan twins, who these 2 YouTube influencers. And so, yeah, so I've been doing that the last 5 years and kind of have this interesting blend of entertainment and brand building experience, but not nearly as unique as Derek's background. So maybe Derek, you can give a little bit of your background. And
yeah. No one wants to replicate the path that I took, so definitely not advisable if you're trying to get there fast. But anyway, so my major was largely influenced by my dad, who's a CPA. He works for the IRS, still does, not retired yet. And my school choice was influenced by my grandmother. So my grandmother helped build the nursing school here at UNC Wilmington. And they moved to North Carolina initially Greenville, but ultimately moved to Wilmington about 30 years ago. And so I've seen this campus go from like a 5-building sort of, sort of pseudo sort of nighttime school. No one would like me saying that, but it was kind of that way. And it's obviously blown up to what it is today. So that was sort of the major / college influence. And, both of us started our career actually in the great financial crisis, which was largely driven by bad mortgages, as you guys know. And I started in Charlotte at PwC, and my client happened to be Bank of America, which was a net acquirer in the crisis. They bought up a bunch of banks, one of which was in LA, or technically Calabasas. And so they moved the mortgage sort of audit accounting team from Charlotte out to LA. And so in my first 2 years of my career, I went from being in Charlotte for probably about 9 months to living in LA, which was close to home because I actually was born and raised in San Diego. So it was kind of a move back home in some respects. And then there was another transaction. So there's a fashion company called Michael Kors that was contemplating going through a public offering around 2010. And PwC moved me to New York to be on that transaction. And I thought, I was real comfortable. Everything was going well. They were starting to talk to me about making partner at PwC, what the process was going to be like. And I got a call from someone that I knew that said, hey, there's this really senior partner at Goldman. You have everything that she's looking for, except you have about half the amount of experience, but I think you should go meet her. And I initially turned it down. And I called the two people that I still go to for advice, which is the partner that I was working for at PwC at the time, this guy Milan, and my dad. And both of them said, you should go just for the networking, even if you don't want to take the job. And I went, I met her, and before I got back to the subway station, the recruiter called me and said, you better pick a number because she's not going to take no for an answer. And that was basically it. I went to Goldman. I had one concern. I didn't really love the job that I was going into. And so more important than the money was actually that I sort of pre-wired some flexibility in terms of what I could do. And it's definitely a piece of advice for you guys that you should always be thinking sort of 2 steps ahead. So not just where you're going, but what the next move is. And so luckily I had taken some good advice. I followed the advice and sort of pre-wired some ability to move after this initial job. And I ended up, telling Deb, the partner who hired me, I ended up telling her that I wanted to actually go back into client service and do banking. And so after I was at Goldman for a year in 2016, I went back into investment banking, and I've been there ever since.
By the way, I think it's such a great example of just the serendipity of life. And I think being open to just all the serendipitous moments that can happen, because you spent, I don't know, 6 or 7 years at PwC, right? And was kind of on this like partner track on accounting. And I'm sure if you look back in hindsight now, this was like the most amazing kind of career pivot you could have made. And it was a huge opportunity, but I think you have to make sure you allow yourselves the flexibility and openness to allow for the serendipity of life. Because I think when I look at my career too, it's not like I think everyone kind of envisions a career and there's like this straight linear path on where it's going to go. And that's so far from the truth. Like once you guys get out of here, you're going to get kicked in the ass of like, this is life, right? And life's going to throw a bunch of like ups and downs at you, but business is never like this, right? It's like up, down, good things, bad things. And I think it's just about seizing like the opportunity. And I think you did an amazing job of that. The thing I was so curious with
I think both of us have.
It's been a wild ride. But the thing I was so curious with,
Don't invest on your credit card. That's the
by the way, don't do the things I did, because I think the risk profile that I had at the time.
So we obviously we've been buddies for a long time, and I think I was back in LA.
Yeah.
And we connected, and we were texting or calling or something, I'm like, dude, where are you getting all this money to invest in these startups? Like, I knew Kevin, he wasn't like, you know, one of the rich kids on campus, but he was investing in all these companies. Like, dude, I just put it on my interest-free credit card. I just keep opening these things up.
Don't do that. Don't do that.
Yeah, that's what we called, we call that a hedge fund today. And,
Yeah,
and fully levered investing.
I was fully levered up, and I would not recommend it.
But no, I think actually that's one of the things that I joke about it, but in all respect to what you did, I think, you know, you should talk to them a little bit about that. I'd be interested in hearing your thoughts. There must have been a level of certainly uncertainty, but also you were so passionate about what you wanted to do that you were willing to take the risk and sort of put it all on the line. And I think it'd be interesting to hear what the thought process was for you and what that means to them, because I think they're going to have to take some risks to really do what they want to do.
Yeah, so I think it started with, number one, whatever you want to do, you need to make sure you put in the hours and the work and the study around whatever it is you're going to do. So I think before I started making these investments and you know, angel investing in these companies, I spent a lot of time just like reading content, being constantly curious. Like I'd say the equivalent today, because we didn't have this like back then, is literally whatever you want to learn, just go on TikTok, hashtag private equity. You can learn everything you want on private equity, right? Go on YouTube, consume massive amounts of content. So for me, the first step was just consume a lot of content and become an expert at the things that I thought I was super passionate about and wanted to have, in my mind, was an unfair competitive advantage at, because I spent so much time around it. And so it's not like I just blindly started throwing money. I mean, I kind of did, but I blindly started throwing money on my credit cards. I felt for me, it was a calculated risk because I put in the work ahead of time. I think if I just started blindly doing it though, then that would have been that's gambling. That's a real risk, and not a calculated risk. And so I think that's like number one when you go into anything, is just really be prepared.
Yeah, definitely.
One of the things I wanted to talk to you about, and we were kind of talking about it last night. It was so good to catch up with him, by the way. So the Airbnb gives us like this bottle of wine. So we're like it's like the old days. Like we caught up, like I haven't seen this guy in like 10 years. That was after we went out for this guy can still get after it. So we were drinking last night. I was like, tell me a little bit about just like what were the main differences between like working at a PwC and going into Goldman, and just like how are the two different, first of all?
So obviously the way that they make money is different. And I think that influences the culture. I think one of the questions that you all should ask when you interview or you talk to people is, how does your company make money? I think you'll either be really impressed or more educated, which is a nice way of saying you'll be disappointed in their answer, but you'll be better off for it. And so PwC charges a fee to provide the market assurance over numbers and disclosures, so that people like you and I now today can go make investment decisions on. And that's largely it's not a transaction-based business. It happens, it's unitized because you have to review a set of numbers, but it's not transaction-based. Goldman Sachs, we make money a lot of ways, but I'll just stick to banking and trading for now, is a transaction-based business. We're effectively a broker between institutions and corporates when they trade assets, and that's transaction-based. And so it's anything that's transaction-based. It could be real estate, it could be investment banking, whatever, ultimately comes down to hustle and sales. And so it's much more high-paced environment. And I think because there's a lot of money there's a lot more money to be made in sort of banking and trading versus on the accounting side, ultimately you get a higher sort of cachet or caliber of resumes and people that want to be involved. So it's sort of the Ivy League kind of white glove type stuff. And so I think the challenges were both, one, going from sort of a quiet, sort of friendly culture into like, the Shark Tank, so to speak, but also learning how to stand out and be a high performer in an environment where you're competing with people who are from Harvard and Yale and, you know, whose mom and dad own companies and et cetera, et cetera. So I think those were the two sort of biggest challenges as I look back.
Yeah, we were talking earlier too. We both have kind of similar backgrounds in terms of family upbringing. Like my dad actually, both my parents were educators, but my mom was like a grief counselor for a long time. My dad was actually a professor of sports psychology. So I didn't grow up with necessarily a business background because he was a true educator at heart and just loved teaching. And so I kind of, yeah, you know, when you kind of go up against the, you know, the people from like the Harvards and the Yales, and you have to kind of figure out a way to stand out. But by the way, one thing you said early, just a little bit earlier, was about like, you know, figuring out how companies make money. The best thing about where you guys are at right now is it's went back to fundamentals. So sure, you know, the market might be a little bit choppy. It might be a little bit tougher to get a job. I'm telling you, this is going to be the best thing that's ever happened to you guys. There is so much bullshit companies that came out the last 5 years. There's like building shit in the metaverse, and like, you know, there's you know, these companies that are raising crazy amounts of money, but they don't actually make money. The best thing that's happened in the last year is businesses have had to go back to like the actual fundamentals of what a business is. And so I think for all of you guys that are going into these companies now, whether it's big or small, there's a lot more back to basics and fundamentals of how a company should operate. And I think a lot of the irrationality, the irrational delusional ambition is gone. And I'm like definitely a rational delusionalist, if that's a word, because I have a startup for sure, but it has to be grounded in reality. And so I think that's the best thing for you guys that's come out of the last 12 months, is that it's kind of back to basics when it comes to business, because it got really crazy for, you know, the last couple of years here.
Agreed. Well, one last thing on the sort of the difference in cultures and sort of making it. I think it was last year I talked to you guys about, there's a book written by Malcolm Gladwell called David and Goliath, but we're not going to go through that today, but I encourage you guys to read that. At the time, I didn't know that I was effectively doing what he says, which is it's a book about how does David effectively fight Goliath and win, right? And so it's the you know, it's sort of the underdog you know, book for dummies. Like how would you actually go compete against someone who's got more well connected than you, has more relationships, you know, maybe better resume, et cetera, et cetera. And I think it's a really good book, a really good read. And just in terms of how do you tactically think about being successful in an environment where you're an underdog?
Makes total sense. I think, you know, another question I had for Derek, and we're kind of just riffing here and kept keeping it super casual, but one question I have for you is, I feel like when I was in college, I didn't really, because you kind of hear about these things, but you hear investment banking, private equity, VC, hedge funds. Can you give the difference between what is investment banking, what is private equity, what is like VC investing, what's a hedge fund? Because they all are nuanced in terms of what they do. But I feel like until you get out into the real world, at least when I was in college, I was like, I don't know what all this shit means.
Yeah.
So
well, that assumes that I know what they are.
Yeah, but Derek still might not know what they mean. But
so I like to make it easy, even in my own head. I like to think about just follow the money trail. And so where does the money go? And ultimately, in the middle of all this, I think are brokers, which is investment banking. But effectively, you have you know, companies like yours, which are startups. It's usually, you know, someone has an idea that yeah, actually we'll use one of our friends runs a landscaping business here in Wilmington, and he just, you know, bought like a lawnmower and a bunch of tools and started, you know, doing landscaping for money. So effectively, he started a company. And so we would call that a startup. And the people who fund, or the money that funds startups is personal checking accounts and, like, you know, family friends, right? And so that's very, very beginning of where the money is. And then as a business grows, so our friend Tango, let's just take this example of running a landscaping company. Basically, he would want to buy instead of having one lawnmower, he would want to have 10, and he would want to hire some people, but that would require capital, cash up front. And so what he would do is he would go to Kevin in VC, and he would do a Series A round. And the later in the alphabet that you get in the series, presumably the more mature or older the company is. So you can go all the way up usually to Series D, and then after that you can kind of go in different directions, but kind of Series D, Series E is kind of ballpark where you'd go. So you'd probably do 4 or 5 rounds of raising money. That money comes from venture capital. And so those are companies that are likely not yet profitable, but they're growing really fast, right? So like if Tango, our friend who runs this landscaping company, went from having 1 lawnmower to 10, that'd be a really big growth rate, right? And so typically these smaller stage companies are growing. So so the people that fund that sort of second stage after startup is VC. And then the next stage for where the money comes from, it can go two places. And I'm simplifying here. So forgive me if there's some technicalities that are different, but you have private equity and you have public markets. So you private and public. So that's sort of where it splits into 2. Public markets is where people like you and I who have brokerage accounts and do investing, and certainly other institutional investors who buy public stocks and public bonds get to invest in companies that are going public. So they're no longer going to be private. And that just means that anyone can trade shares freely in the company, either on an exchange or off an exchange. If Tango wanted to take his company public, he would call me, of course, because he's a friend, and he would say, "Hey, Derek, I want to go public, and can you help me do that?" And we'd say, "Sure." We basically have to do 3 things. We have to figure out what your story is, right? We have to market you. We have to educate people, probably the best way to say that. The second thing is we got to figure out what you're worth, right? And there's a process to do that. We call it modeling, we call it benchmarking, and we also call it finger in the air sometimes. But no one really knows. And basically what we'll do in an IPO is we'll haircut what we think the fully distributed value is. That's a technical term. What it means in layman's terms is where we think the stock is going to be once it's trading on a public exchange. And then we discount that depending on the market. Probably today it would be 25% haircut. But usually it's around 20. It can go as small as 15. We haircut that value, and that's the price that we get the IPO investors to come in at, right? So there's a little bit of supply and demand going on there. So that's kind of like the public. The third thing we do, obviously, then is we'd call investors and we'd build the order book, right? So that's kind of that's the public route for the landscaping company. In private, private equity, we call it private markets. Basically, that is a control. They're usually control investing capital, so they're buying more than 50% of the landscaping company because Tango would like to get some liquidity and go buy a house in the Bahamas or maybe a vacation home in France because now he's made a lot of his money. Maybe he wants to go start a new company, like for example, Kevin may want to go start a new beauty brand, and so he may want to focus his attention on something new, and so he would sell out of the old company. He would go to KKR, Carlyle, Permira, Blackstone, certainly, TPG, whoever, and basically meet with a private equity firm, or usually he would do that through a bank. Again, he would obviously call me because we're friends, and I would help him negotiate essentially an exit price. And so that's the private markets. And on top of all that, you have what we call asset and wealth management, which is basically wealth advisors that are either advising institutional or individual capital that go into the public and private markets, right? So it's all connected. That's why I said you got to follow the money. And where does institutional capital come from? It could be UNCW's. UNCW certainly has a slush fund of money that they invest. So that would be, that would be institutional capital. Individual capital comes from registered investment advisors. So people who manage, my wealth, Kevin's wealth, certainly your guys' as well. And that money basically either goes into the private equity fund when it's raising money. Because remember, the private equity firms are not investing. Sometimes they're investing their own money, but for the most part, their funds are investing other people's money and they're charging fees to do that, to go find investments. Or you have a wealth advisor who's basically, managing your brokerage account for you and you're buying public stocks and public bonds. So that's the life, so that's like the follow the money trail, so to speak. And in the middle of each of these touch points, what you'll see is people who are brokers, and that's where investment banking comes in, is we're really kind of the middleman. And we, again, we charge a fee for doing that. So hopefully that makes sense. Certainly let me know if you have any follow-ups or points of clarification.
I'd say, by the way, kind of going back to just like how to follow up and dive in and learn more on this, I would honestly just go to TikTok, and there's like all these accounts that have popped up, like a day in the life of a venture capitalist, day in the life of a private equity analyst, day in the life of a PwC first year analyst, right? And you can just like consume so much content and get a much better in-depth breakdown of like what each of these industries really are, which I think is the benefit of all the content that's out there today, is that I think when we graduated, it was hard to get, there just wasn't the level of content 15 years ago as there is today. And you guys can have such a better idea of like what's on the other side of the job that you're going into before you go into it, if you put the time and the research in.
I guess I left out hedge funds.
Yeah, you should
So
definitely follow there.
hedge funds are a weird one because they kind of started out as taking really, really big bets in the public markets. So this is like, you guys are all familiar with active and passive investing. You can have a passive index that you invest in, or it can be an actively managed index. So I would put hedge funds, they initially started out as being like super, super active, right? Taking really, really, really big bets on public stocks and public bonds. But more recently, because the TAM of capital that's being allocated to hedge funds has shrunk over time, that capital is going into private equity, basically. What they've done is they've shifted a little bit, and they're kind of doing this hybrid private public strategy. But basically, a hedge fund just takes really, really, really big bets and usually tries to negotiate in the private markets, either additional structure in the deal, or in the public markets by way of derivatives to sort of cap the downside. And they're usually willing to pay money to cap the downside. That's effectively what a hedge fund is.
Cool. So good explanation. What are some of the other questions we had?
Talk about your dad. Did we talk about your dad?
I think we talked about my dad a little bit.
I mean, I'd like to hear a little more. You've always talked about the influence of it. He worked at Michigan State.
Yes, he was a professor of sports psychology at Michigan State. And I think for me, just the benefit of that was growing up with someone who was a sports psychologist, was I was subconsciously picking up positivity and mental toughness. And that is a core tenet of like whatever you do in life or in business, because we kind of talked about it. There's no like straight path, and there's lots of ups and downs. And so you definitely have to build that. I think it's a huge advantage to have that as a core skill set, to have positive thinking. And you have to balance it though with rationality, right? Like I think of like people like sitting on a spectrum, and I'll kind of give you the spectrum of different people, right? So on one end, there's an artist, right? Artists are like extreme dreamers. They live in like, art land, and they're like super creatives, right? On the other end, there's like a pure play, numbers driven account, very black and white accounting, right? And then there's like this middle, they're very like grounded in reality, sometimes almost too much grounded in reality, right? And I think to make to be really effective in business, let's say you're on kind of the more creative spectrum, you need to figure out how you move as close to the middle as possible. So if you're a creative, you need to pull yourself out of like dream world and back into a little bit of reality, and not lose the creativity, but be able to cross over and have conversations with business people. And I think if you're let's say I keep using accounting, right? If you're an accountant and you're very numbers driven, black and white thinker, you need to be able to really excel in business and broaden your skill set. You need to be able to pull more towards the middle. And that's, I think, what ultimately makes good managers or good CEOs, because they can really cross over. And I'll give you the example in our business, right? I definitely lean like to the right, to the right of the line a little bit, and I'm definitely more on the business side. And so I can jump in with like our COO or our finance person and talk all day about numbers, but I can apply that back to the rest of the business in a way that doesn't lose everyone, right? And then because I'm on the borderline here, I can cross over and vibe out with a creative and vibe out with someone on social, and they'll actually be able to have a conversation with me because I can cross that line. But if I was all the way over here, it's impossible to cross over and have that, creative conversation. So I think it's just really important to figure out, one, where do you fall? And I think most people in this room, if you're in business, probably generally are less on the creative side for the most part, and a little bit more on the business side. And how do you continue to broaden your horizons and move yourself to the middle?
I mean, I think it's so important to what you do, because when I think about my, generically speaking, I will say private equity clients, but in there I would include VC. It seems very transactional, very financial when they're doing investing. And one of the things that I think is differentiating in your business is you actually spend equal to or more than, the amount of time actually creating value in the company through the things that you're doing. Yep. Which includes sort of this angle of influencing. So I think one of the things that be interesting to hear is just your path to managing influencers and how that's sort of taught you what some tools or learnings that are actually helping you create value in your companies now.
For sure. I mean, it's so funny because it's two completely different, businesses and industries. So managing talent and managing influencers has its own complexities. I mean, I managed a lot of different influencers over the years. I managed, Jake Paul from when he was 18 to 20. And so that was kind of a crazy time when it was like back in the Team 10 days. And there was a lot, that was crazy, right? And so working with talent, you're trying to help talent and influencers really shape their vision for where they want to go in their career, but they're also creatives at heart, right? Some of them are have a more of a, like I take Mr. Beast, right? It's something like Mr. Beast for sure has an insane business mindset and has figured out how to monetize his influence. But I'd say he's like a rare breed that's been able to cross over. A lot of them are creative, so you have to really help them focus their vision. But managing talent in a lot of ways I've been able to apply that to running the company. Most of my day-to-day now, we've got around 70 people in the US and 50 people globally. So it's, like a good mid-sized company. Most of my time is relationship management with the team and making sure I'm being clear on like, where are we going as a company, and making sure everyone, whether it's the leaders of the company or, new people on the team, everyone feels heard, they're communicating. Communication is one of the hardest things, I think, particularly in a virtual world. And so the relationship management aspect of management is the hardest part. I think when when you're studying management, it's about how do you set deadlines and goals, and those are all really important things. And the formalized piece of management is super important. But honestly, I think it's like the 80-20 rule, where 80% of it is like the relationship-based element of management and driving everyone in the same direction. That's the most underrated. And that's going to take you guys years to like learn, because it just takes reps. It's like the 10,000 hours rule, where anything you do, you're not going to be good at it immediately. You're going to mess it up a lot, and it takes just time to learn it.
Any advice for the students on, if they're trying to decide? Because I think the good sort of juxtaposition between me and you is kind of corporate versus sort of totally like, I don't even know what you would call it, but just like very startup, build your own path, go your own way. Any advice for someone who's trying to decide which one?
Yeah, so I mean, I think we talked about this a little bit at dinner last night, and we had a great dinner. I think that the beauty of like Business Week, right, is you get to go see lots of people, lots of speakers like me, Derek, tons of other people, amazing people you guys are going to listen to. And what I talked about last night at dinner was that there's probably 5 to 10% of you guys in the room. They're like, holy shit, everything Kevin said is incredible. I want to go consume tons of content, what he's doing. And then there's another 5 to 10%. They're like, wow, Derek, I want to be an investment banker. I want that path. This is incredible. Then there's probably 50% of you guys that are like, wow, this, like what they're saying makes a lot of sense. Like cool, I should explore it more. And there's probably another 40% where you guys are like, this doesn't sound like it's for me. And that's totally cool, right? But what you guys need to do is go figure out who is that person or people for you that you guys can, learn from and figure out what makes the most sense for each of you individually, because it's not one size fits all.
Yeah.
And so, so for me, like, as I was kind of coming up, I think I never had like one mentor. I consumed lots of content. I picked up bits and pieces from lots of really smart people. I think the one mistake people sometimes make with mentors is like they take every word they say as like, this is like what I should do. And that's not really the case. Your job is to basically look to a mentor to get advice from them, right? But only you, because you're your own unique individual, are going to pull out the bits and pieces, like the 20% that is like gold from what they're saying, and then apply that. 80% of what they say does not make sense for you. It made sense for them. It didn't make sense for you. So I think it's just finding the right people that you can kind of learn from and draft off of, and like directionally figure out where you want to go.
Yeah.
What would you say?
That's right. I would say it's really important to listen to your inner self and understand why you feel sort of maybe biased to one path versus the other. I know for me, being Black or at least half Black, there was a lot of value in my family was placed in safety and sort of setting a floor for yourself. And the way that, certainly my grandparents and sort of family down the line, one of the ways you could do that was through education. You could guarantee yourself some standard of living through education. So that was always important. And I think part of that was also the certainty of corporate America. While it has its challenges, certainly, from a race perspective, it's gotten a lot better. And also that was a way to sort of build in certainty by, if you're a Black guy, but you work at Goldman Sachs, that takes maybe a little bit of the edge off for some people, just in terms of the resume or sort of blending in from a culture perspective. So I think I'm certainly saying this in hindsight. I didn't know that was the reason at the time, but I think you guys, the reason why, and I'm just sharing it with you as an example, you should pay attention to, certainly personal things or voices in your head that are pushing you in one direction so that you understand why you're taking a certain path. Because I think the other danger in what we're saying is you can force yourself into something that really what you really want to do is the opposite. And if you don't listen to yourself, and if you're not honest with yourself about your reasons, you'll find yourself wasting time. And I could be someone could accuse me of wasting time, because certainly accounting was easier, it was more certain, and it was easier from a getting in perspective, not easier as a profession. And I think if I was really honest with myself, I think being on the finance side was really ultimately what I wanted to do. I just didn't know it, or I wasn't willing to admit it to myself. Accounting was just an easier path. And not that I wasted my time, but I think, I certainly could have got on to my path faster if I would have just listened to myself. So that would be my advice.
And hindsight's always
2020.
Clear. Yeah, hindsight's so clear. I also think the other thing that's really important for everyone is to really figure out, and it takes time to do this, right? But really be honest with yourself and figure out how you want to set up and optimize your life for the life that you want to live. Because I think that you have to be realistic about, if you have extreme ambition, right, and you want to be an investment banker at Goldman Sachs, or maybe be an entrepreneur, you need to know the sacrifices that come with that, right? And that may not be for you, which is the amazing thing about life, which is totally cool, is that if you want to have more work-life flexibility and kind of work maybe a more 9-to-5 job, that's awesome as well. But I think you have to get really realistic about the things that you give up in each scenario, right? Like I think
Totally. We were talking about that this morning.
I mean, Derek's on calls at, I woke up this morning, it was like 3:45 in the morning. I was like, is Derek on a call right now? And
He
he's
got
on with
up at 6:30.
Yeah.
He's like, someone was up early.
Yeah, I was like, damn, he's on with London because like he's got it, most of his business is in London now. He's got to be on those calls. And that's probably not something normal for most people, is to be up on calls at 3:45 in the morning, right? And I think for me, being an entrepreneur, a lot of times when I do these speaking engagements, everyone always hears all the cool shit that happens. But like what people don't hear is I wake up every night in the middle of the night. Because by the way, and I'm sure this happens to everyone, but in the middle of the night, that's when you're the most vulnerable. So all the vulnerability goes into your head and think, well, what happens in my life or whatever, right? But when you're running a business and you're responsible for people, and businesses have when the highs are high, they're really high, and the lows, they're really low, right? And that's not for everyone because there's a extreme amount of stress to being an entrepreneur. So what I found is we have a lot of people that maybe come into our company and they actually think they want to come in and learn and then become an entrepreneur. And then a year later, they come back to me. They're like, I never want to start a company. They're like, I would much rather be an entrepreneur and be super entrepreneurial, working inside an organization and make lots of change and impact in the company that I'm going in. And have and work hard, do really well, but have like a really great work-life balance. And that's for me. And the beauty of like life is there's no wrong answer, but I think it's really important that you have to be self-aware and heat check yourself and figure out what makes the most sense for you, and be honest with yourself, because that's so important. Like I'm honest with myself that I'm slightly crazy and slightly delusional, so it fits itself well for being an entrepreneur. And I don't know if I could really work in a corporate environment at this point. But I know the sacrifice that I'm going to have to put in for that to happen.
I'm pretty sure that the skills go one direction. So you could go that way. I don't know if I could go the other way, but
I mean, I don't know if I could last in corporate. I don't know.
How we doing on time? We're good.
One or two more comments and then we'll move on to Q&A.
What do we have? I have to check. We shared notes this morning. It was very cute.
Yeah. What do you got?
Maybe just talk a little bit about your investment philosophy. I mean, I think it's in all this, there's the influencer, there's the value creation, but how do you find businesses to invest in? And do you have a view on, I know you have a view, but what are your views on sectors and how do you come up with them?
For sure. So maybe I'll talk a little bit about, so the companies that I'm currently running, those are companies that I own and operate, and I have really amazing co-founders that we started these businesses from scratch. So Glamnetic, I have an amazing co-founder, Anne, who is really, she's got like the social content, creative, product development side of the business, and I've got the other side. And then when I started this hair brand, my two partners, Sharon and Jordan, they were the first two employees at this brand called ColourPop Cosmetics, which is a big, beauty brand. And so going back to the relationship building side, I had invested in a company probably 8 years ago called BeautyCon. And at the time it was like the Super Bowl meets Coachella of beauty. So imagine like this huge event, influencers come, beauty brands. It's a really cool experience. And I met them there and I kind of kept in the back of my head. I was like, I think I'm going to do something with them one day. So then 5 years ago, I shot them a DM and I was like, hey, let's link up. I'd love to take you guys out to dinner. And we started talking and I said, look, if you guys could build a brand in the beauty space, what would it be in? And we started talking about the hair space and hair care and hair category and how there's an opportunity there. And then I did a ton of research on the space. I thought there was like a gap in the market. And then we sort of naively, honestly, started the business after that, because I think you have to be a little bit naive sometimes. When you know too much, it's almost not a good thing. And so we started that business. And so those are companies I own and operate and running day to day. Then on the investing side, which I'd say bucketed more in like the angel investing kind of earlier stage, I think it goes on a spectrum. So later stage growth rounds, when Derek was talking about like Series D, Series E, that's like Uber before it went public. There's like a weighting system where like investing in Uber before it went public is like 90% around the financials and financial performance and 10% around your gut instinct of what's going to happen. Early stage investing, right? Like if I meet an entrepreneur, they're like, I'm building this new cool consumer brand. It's going to be this like, I don't know, hot sauce company. that's gonna, disrupt the hot sauce space, right? And
There's
they
like
may-
barely proof of
right.
concept.
They've got like maybe a couple $100,000 in sales or something like that, right? And it's just that really comes down much more to I'd say it's like 70-30. 30% you need to do the work and look at like the fundamentals of like, is the market size big enough? What's out there competitor wise? Like all the business principles that you would normally do. The other 70% is the hardest part, which comes down to like, do you think the founder or those founders can actually execute on what they're saying they're going to do? Because I think for me, the investments I made that have been the most successful, it's always been around picking you pick the founder, right? And are these people going to execute on the vision that you're laying out? And so that's the hard part, because it takes reps and lots of meeting with people and asking lots of questions. I think when you ask surface level questions, you get surface level answers. And I think for me, I've learned to just dig really deep and try to understand, why are they building this business? How are they thinking about it? A lot of times you'll see in like early stage decks, they'll just have this like amazing like growth path. They're like, we're going to do $1 million year one, then 5, then 20, then 50, then 100. And then you're like, okay, just tell me how you're going to get to $1 million.
We call that a hockey stick.
Yeah. It's just, but it's like a bullshit metric that you come up with when you're an early stage company and you just want to pick up money. And I'm like, I don't care about years 3 to 5. Just tell me, how are you going to get the first $1 million? Like, how are you going to market it? Who are you going to go to? Who's going to be a customer? Where are you going to get the money from to go acquire those customers? Because it's really expensive to acquire a customer now.
Yeah.
And so it's really weighted early on the founders.
Yeah.
And that's why I love the early stage side, because I feel like, at least for me, because I'm an entrepreneur, I can tell if this person has what it takes to hopefully execute on it.
And that's how you pick the winners.
Yeah, hopefully. The other thing is, and I'll kind of give you guys a good story real quick on, like you mentioned DraftKings, right? Here's how like relationships are so important in your life, and like organically building relationships over time, it all compounds. And so there's the compounding effects of relationships in your life that I think for Derek and I now in our careers would probably really come into play. So DraftKings at the time, for any of you guys know, it's kind of the sports betting space. They're public now, but probably 7 years ago, the founder was kind of looking to meet with different athletes. I hooked him up with Carmelo Anthony's investment guy at the time, who was looking to do more investing. Didn't ask for anything, right? Just hooked him up with Carmelo's team. Carmelo ended up investing. So when DraftKings ended up doing a much bigger round, like a $200 million round, it's hard to get in those rounds. Because of the relationship, I got like a $10 million block that I was allowed to fill. And it was like a really hard deal. And so because of that one relationship I made, that was a later stage business, but I went and pulled together this round from a bunch of NFL guys and high net worths. And
dude, it's incredible. Like I don't think I can underscore enough how hard it is to start a venture capital firm, because Silicon Valley is so clubby. I mean, I have, one of my clients, which is my private equity clients, which is Brookfield, which is obviously, the second largest asset manager in the world, is really having a hard time breaking into VC because they haven't been in the club. So what you've been able to do is absolutely incredible.
But you have to find, this can go for any industry. You need to find the pocket of opportunity where your skill set can provide outsized value. So for me, right, that was when I started investing. There's tons of Silicon Valley investors that know the tech world. There's a plethora of money that you can raise from Silicon Valley. For me, the unique advantage I had was I had all the entertainment relationships, right?
Yeah.
They don't want another Silicon Valley fund on their cap table. They can get that all day. I was able to squeeze in these rounds because I brought something unique to the table that they didn't have. And so for me, that was kind of like the unique value prop I figured out.
Yeah, amazing.
So I think this is a good spot for us to start the transition, but they've been talking about the importance of personality, relationships, and people. So let's give them a round of applause while a few of you sneak out.
Yeah, oh yeah.
They have classes at 10?
Not in business school, but the rest of the campus.
Right.
How's everyone feeling now? Good? Nice.
So we've got questions from some of y'all. Reminder, if you've got a question, text it to the number up there and we'll see how many of these we can get in front of Derek and Kevin. We'll combine some of them as best we can and maybe even see if we can find some themes.
Everyone gets their
What's that?
the slip for credit.
Oh,
All right, so if you guys are willing, can we pick up on the theme that you were just talking about with relationships and people? And one of the questions that came in earlier was about how to build and maintain those relationships. But let's start at a really low level. So tons of us on the faculty give very bad advice to the students or incomplete advice when we say, build your network, go network with people, but we don't tell them how to do it. What advice would you have for starting that process? How do they introduce themselves to folks? If they were the cold call one of you, how does that go?
yeah. So I think for me early on when I started my career in the entertainment business, I was always better in like one-on-ones or small groups than like just big networking events. So I would set a lunch like every day almost when I was, I get my like lunch break. And so I would meet with other, assistants at the time or agents at the talent agency. And what I would always do is one, ask lots of questions and then make sure you listen. So I think it's really important to like listen to the other person. But the other thing that I've always done throughout my whole career is try to make sure that I can add value for them without asking for anything in return. And then that's what really builds like the compounding effect of relationships over time. I think it is important to like go to networking events, but I think I think that you can have like I don't even know what the word would be, just like misguided networking where you're like, hey, my name's this, that doesn't do anything, right? Like where you're just going and meeting 100 people at once. I think you really want to like hone in and have deep conversations with a couple people and hopefully come out of it, with an ongoing relationship there. And I think over time, again, it goes back to doing good things for, doing good by people over time. And I think like your integrity and the relationships you build is everything, and it's a compounding effect. So I would start just there by, just consistently meeting with people in one-on-one or small group settings and building from there.
Yeah, I think it's great. I mean, I don't really have much to add other than to just reiterate two things that you said. And one would be networking is about giving from you to someone else. And I think people misconstrue sort of networking as what can I get? It's like, I don't know how many of you guys play golf, but it's like, everything you're supposed to do in a golf swing, you're actually supposed to do the opposite, right? To make it work. Like that's kind of how I think most people approach networking, and they need to turn that inside out. I mean, there will come a day where you can draw on that account, but that's not the purpose. And if you're even thinking about that, then you're just set up wrong. And the second thing I'd reiterate is just so you kind of touched on this a little bit. I think your point was about having genuine interaction. And I think in order to do that, you need to find things that you are passionate about, things that you like, and you need to build community around that. Right. And I was just talking to one of the students earlier who likes to run. I would encourage you to build community around that and let join a running club, go do races and meet people and just let that evolve into whatever it becomes. And that's part of the fun. And everyone has their own version of that. And if you're really, really passionate about networking, you could have 3 or 4 versions of that for yourself. And I think that would be the two things I'd reiterate.
I think that's a great point. Like finding pockets of communities of people that have shared interests is a really great place to start.
How do you follow up with folks? Do you stay in touch with them? Do you sort of regularly try and call them, or do you just let it happen?
I think Derek and I are actually a great example of this. We went to school together. It's not like we were best friends in college, right? Like we were, friends, friendly, and just like kept in touch over the years. And I think, I've done some favors for Derek. Derek's done some favors for me. And, we check in with each other here and there. And, I always, I always try to like keep up, keep up with what he's up to long term. But it takes work, right? Like it takes a proactive effort to continue to foster these relationships over time. And so you kind of just need to, at least for me, I kind of naturally have ingrained that into the way I think. And so it's not forced, but it comes off just naturally because I do it anyways.
Yeah. Yeah, I mean, I think what Kevin's saying, and he said it well. I'll just say it differently for those of you that this might help. There's a spectrum of interaction, which from a lot to a little. And if your interactions are genuine, you don't actually have to force them, right? And so, like Kevin and I would consider him a good friend, but there's no forced interaction. If he's in London, he'll call me. If I'm in LA or Miami or wherever in the world he is, because he's everywhere, I will certainly call him. And if he has a question about valuation or, hey, what private equity firm should I talk to or whatever, he'll call me. Certainly, with him being in the VC world, I pinged him and said, hey, is there any advice that I can give you? Anything you want to know? Just given all the recent news. And so I think if it's genuine, it doesn't have to be forced. And if you find communities that we were talking about earlier, the frequency of the interaction is probably going to be a lot more, and you don't have to force the follow-ups. So I think just being okay with allowing the interactions to be natural and fit either in the spectrum of somewhere from a lot to a little is really important.
So you mentioned recent events and potentially calling you for questions and information. We've gotten a few questions from folks about the, hopefully not financial crisis, but the events around SVB. And what did that mean for Goldman Sachs? What does that also mean for VC firms and startups in Silicon Valley? And I don't think we want to turn this into a case study, but if y'all could you share a little experience around those?
Well, by the way, this is great because you'll get two different perspectives. My perspective was, I was like, oh shit.
Two people that were squarely in it.
Yeah. Yeah. I was like, damn, SVB is going under. I bank with First Republic. So I'm like calling up my finance guy on Friday morning. He's like, what's going on? I was like, move the money. He's like, what are you talking about? Move the money. I was like, we need to move money. I was like, wire money into I was wiring money into my different personal accounts. I was wiring money to Morgan Stanley, kind of try to split the money because I was like, I don't know what's going to happen. And it was all moving so quick because like Twitter moves quick. And I mean, Twitter literally, and there are fundamental issues Derek can talk about with SVB, but like there was a bank run within like 24 hours because of the Twitter bank run, and then it was cascading.
Yeah.
And so for me, from a startup founder perspective, I was like, I got to get my money spread out. And that was like a crazy 24 hours.
Or should I spread my money?
Yeah,
out?
what should I do? Should I keep it here? Should I not? And there was a lot of uncertainty. And so, I mean, it just goes back to how quickly things move today. Like literally in a 24-hour period, a bank went under, and then like 4 other banks were potentially going under overnight. And then if the Fed hadn't figured out a solution over the weekend, when the Monday market opened, it was going to be a like bloodbath of all these banks out of business. And that was really scary, when you're, when you're running a startup, and a lot of these people that bank with SVB, they didn't know if they're gonna make their payroll.
Yeah.
And you had like the Goldman perspective from it.
Yeah. Look, I mean, obviously Goldman, we were involved. So I'll keep my comments somewhat limited, but I would say, from a finance perspective, my personal view is that this is a classic duration mismatch issue. And I've heard a lot of people talk about liquidity and, treasuries and this, and it's like, well, clearly they haven't read the balance sheet, because if you actually go on the balance sheet of SVB, the biggest set of assets was actually commercial mortgage-backed securities, which are probably one of the most liquid securities you can buy in the world. And they certainly had a decent amount of treasuries, but the second most was actually residential mortgage-backed securities, which is also a very highly liquid security and also investment grade. The issue was that these securities were very long dated in nature, so they had long duration. And those of you guys that have done bond math know that all these securities also have fixed interest associated with them. So when interest rates go up and you're discounting the difference over a long period of time, values go down. So that's one thing. The second thing is the commentary in the news and by people that people didn't understand what the value of these things were is wrong. Clearly, they haven't read the balance sheet, because even though they're held on the books, these securities, if they're held to maturity, are held at par. If you go into the footnotes, there's a mark to market in the footnotes. So no one was confused about what the value of these securities were. They're actually included in the balance sheet. And so my conclusion from those two things are, clearly someone was not matching the duration on the asset side and the liability side. And ultimately that was the downfall of what happened. And unfortunately, when you have, economic pressure, some could argue the Feds should have raised rates earlier and shouldn't have been such a steep sort of hike. But when you have certain pressure points that cause dominoes to fall, others can fall as well. And so unfortunately, the mismanagement of the duration of the balance sheet and also the high raise in rates, and then ultimately some banks going under, coupled by actually a squeeze in digital currencies as well, those are starting to leak into other parts of the market. And I think largely people have done the right thing to contain it. They've done the right thing for the short term. Certainly you could debate whether they're the right things for the long term, but that would be my commentary on that.
This has been super interesting for me to just watch the difference in your responses and your demonstration of your knowledge and experience in your spaces, right? Kevin immediately approaches this from an influencer standpoint, and this thing happened on Twitter. And Derek comes at it from the finance guy standpoint of duration mismatches and asset differences. And
well, the difference is he had to move money, or he had to decide whether or not he was going to move money. I had clients calling me, yelling at me, saying, "If there's a company for sale, why didn't you call me?" Right? So I have to be able to talk people through the technicals. He has to be able to figure out how he's going to pay his employees.
So I imagine both of you got to your level of experience where you can see what's going on in your worlds around events like this through an occasional lack of success, maybe even a failure or two. Can you share with us maybe a failure from early in your career, something that maybe some of these folks are going to run into, and how did you grow from it, move on from it? What did you learn, et cetera?
So I should go first because I failed the most.
I don't know about that.
Yeah, I mean the list is long. I didn't graduate with a very good GPA. I think I was sub 3.0 going into my senior year. Ultimately graduated with I think a 3.2, somewhere around there. So that was certainly in my list of failures. I would put that on the list. Another one would be there's actually one of the speakers here. I made a mistake with him when I was a student, and I was emailing him about a job. We talked about this last night, and I misspelled the name of the company, and which you should not do on purpose. You should try to avoid that if you can. But it's a harmless mistake, and I certainly would not be too judgmental about it. Kevin actually might, though. You surprise me sometimes.
No, I don't pay attention.
Anyways, he basically shut me down. It was like, if you can't spell the name of the company, like, go away. So just not paying attention to detail, I think, is the bigger thing. Yeah, I mean, this kind of goes into the grades thing. Like I flunked certain classes and had to retake them. So certainly, the importance of I think education, and tied into that is developing relationships with professors. I wish I would have spent more time with people like yourself, Allison, certainly, Ethan. I mean, these people are great. They can make professional connections for you, and they can help guide you. And I wish I would have spent more time doing that. So,
I mean, I've had so many like bumps in the road, failures over the years. here's the thing, when you put money in something, if you lose money, that definitely is probably not the best outcome. And so I think it kind of goes back to like, I made a lot of different investments and like some of them have done really, really well. And like their outsized performance of a few makes up for the ones that don't work. But I think it's always a bummer when you make an investment and you misjudge. It's a failure for me to identify the reasons why this thing ended up not working. And so for me, that meant that I needed to continue to hone my instinct, because I think in hindsight, again, it's super clear in hindsight what I missed. But in the moment, I clearly, if it was the founders just like couldn't get the vision together, and I didn't realize that like the dynamic between the two founders wasn't going to work, and then that's ultimately what made the company not work. That was a failure on my part to see that and ask the questions. And so, or it's maybe, I manage so many different influencers and talent, and like, sometimes it works with talent and we have a great relationship. Sometimes it doesn't. And sometimes that can be them. Sometimes that can be me. Sometimes that can be both of us. But ultimately you need to hold yourself accountable and responsible. I think a lot of times today, people have a tendency to blame others for what happened, as opposed to like looking within and thinking about, well, what can I learn from this and what can I do better? And so that's what I try to like take away from any failure or so-called failure or whatever it may be, is like, what can I do better for next time? Because you don't want to also sulk on your failures forever, because you got to move on and move to the next thing.
Can I follow up on that? You're talking about, you've mentioned this several times, that when you're investing, you're really investing in the founder as much as anything else. You also freaked out several of the faculty in the room who all immediately texted me when you said, go consume content on the internet, learn about finance on TikTok. And they're like, oh my gosh, no. How do you filter out what's authentic, what's good information, what's bad? Because there's tons of get rich quick schemes out there. There are tons of influencers peddling stuff. How do we know what's good and what's not?
Well, I think hopefully everyone has like at least a starting lens of like what's really bad, right? So you should, if you don't, then I don't know, it's going to take some work. But like there's some, you should have at least a lens of this is like these get rich quick. There's no get rich quick scheme. So if it looks like that, then it's probably bullshit, right? That's number one. And I think you get that from it's the 10,000 hours rule in anything. I became an expert in, let's take influencer marketing, because I spent 10,000 hours on it. I'm trying to be ahead of you guys. I'm 36, you guys are 20, 21. I'm finding out about Alex Earl before you guys found out about Alex Earl, right? Like, I'm like, who's popping off on TikTok? I'm like watching the Nelk Boys. I'm watching Josh because he's got his new podcast with like the Barstool with Portnoy, right? And I'm trying to be ahead of you guys because I'm consuming crazy amounts of content. So I think one, it just comes down to like the time that you have to put in, and then your like bullshit radar or your like instinct is going to tighten up over time. So I think like in the immediate, don't just trust everything you watch, because it's going to take you time to pull the right bits and pieces from it, but you have to start somewhere. And I think also like, TikTok, YouTube, whatever, it lends itself really well to the way you guys learn now. So like you can go literally get bite-sized content of, the good thing about TikTok is usually when around educational topics, the best content usually will rise up. So if you go to #private-equity, there's probably a lot of really good day in the life, influencers that you can follow that are like these micro influencers that are like working at a private equity fund as a third-year analyst, and you can learn a ton from them. So I do agree there's a lot of like stuff you need to keep a lookout for, and but it's better. I think it is worse if you don't consume content.
I was just going to agree with what you were saying earlier, and now here again, we are in an information age, and I think that's going to be really beneficial, especially for me. I'm kind of transitioning from marketing and into finance. Do you feel like both of you're still learning like every day in your job? And where are you pulling that in? Books, different people, just your day to day? Where do you?
For me, I feel like I'm learning more than ever. Like it definitely doesn't stop. I think the way I've tried to set things up in terms of how I consume content is I have a kind of an eclectic range of things that I listen to, right? So from a culture perspective, I listen to like the Spotify top 50 songs. I kind of go through that list every week because I want to know what's culturally relevant from like a music standpoint. That's super important to be up on what's going on in culture. I'm scanning TikTok just generally to see what's happening. I'm serious. It gives you a good range. Just I
don't
want
even
to.
have a TikTok, so
I'm telling you, you're missing out. You're missing out, man. You're missing out. And by the way, you don't have to be you don't have to produce content. It's about being the content consumer. So it can span from listening to like the Spotify top 50 songs all the way to making sure you're like up on what's going on in politics, to picking 3 or 4 different business podcasts or thought leaders that you're interested in, to finding, again, it goes back to like the 5 to 10% rule. Maybe 5% of you might be like, wow, what Kevin said or what Derek said is really interesting. Go find 10 other people like us. Or there may be someone else like that for you, right? Maybe someone's super into like wanting to be a social media strategist. I'm probably not the best person to listen to be a social media strategist. There's better people than me for that. Go find those people and consume all their content, So it really ranges the spectrum for me.
yeah, I would say the same for me, just in different formats, obviously. I mean, for me, the key is really slowing down and taking time to absorb things, and not just because there's so much volume, and I'm lucky to have a lot of relationships, a lot of good, friendships, a lot of clients, but that means it's high volume. Like when I leave here today, I'll probably have over 100 emails I need to answer. And that's like a real number, right? And so the good part is that I like to be in this sort of high volume game. It fits my personality. I like to be on the go. The downside is that I'm always learning whether I want to or not, by nature of my job and just, where I am. But to really soak things in and really sort of get grounded in them and not make sure I'm not missing the learning opportunity, I need to actually force myself to slow down. And so for me, that's the thing that I'm usually focused on. And yes, certainly I would say I'm learning all the time, and I'm learning so much all the time. And I feel like it's so scary that I didn't know that before, right? And I just like, it's constantly, and that'll be true for you guys as well.
Derek, maybe we can stay with you. We've got a couple that have come in on sort of similar themes, wanting to know more about your transition from PwC, the Goldman, what does that recruiter interaction look like?
Yeah.
How are those connections made? But along with that is maybe a broader theme from some folks out here of how do you transition from one industry to another? If somebody's maybe a senior and they're getting interested in some of this stuff, maybe speakers are sparking thoughts to them and interest. How do you change course? And I know each of you have stories around that you could share.
Yeah, I mean, I'll go. The transition from PwC to Goldman was actually, we've talked a lot about relationships. So I had a really good friend of mine, Billy Ayers. He's still a recruiter. He runs his own recruiting firm today. We were actually in the same class at PwC. And after a few years, he left the accounting world to go recruit accountants out of accounting. So he's a recruiter in the accounting industry. And I wasn't interested in leaving PwC. So like, the recruiters hit you up all the time. And I never responded, just kind of usually ghosted these things. But I didn't, because it was Billy and I knew him, he was a friend. And so that was really the connection. And then I would say, like, look, if you're looking to change careers, or you feel like maybe you're late, I think those two things are somewhat related, but I think they're separate. If you're looking to change careers, there's usually a natural inflection point, which is grad school. So you can go work for 3 to 5 years. You could go, or you can go direct, if you do an MBA, go work for 3 to 5 years. If you want to go into law, you can certainly go directly into law. And so I think it depends on where you think you want to go next in terms of how you transition, but certainly grad school is a way to do that. If you're late,
UNCW grad school.
Exactly.
I'm contractually
I see
obligated
you guys are climbing up in the rankings, which is great. You need a PhD program.
I was in the grad school.
Let's not open that door.
I want to be the first PhD student. That's why it's somewhat of an inside joke. That's now a joke for everybody.
How would you like to endow the PhD program? I'm also contractually obligated to
once I make
ask
partner
that
at
too.
Goldman Sachs, I'll be happy to discuss, but we've got a few more years.
We've got this on tape.
if you're late, which is an important distinction, I think you have to think tactically about what's going to be the most efficient path. And what I mean by that, let's just take an example. So let's say you're a senior and you decide you want to do investment banking. Well, guess what? It's too late, because you apply, the entry point into investment banking is your sophomore year. Applications are open now. Like currently the window's open for sophomores to apply for investment banking jobs. So if you're a junior or you're a senior, you're too late for that window. But take someone like me. What if you could go work not in the investment banking department, but somewhere else at a firm, get your foot in the door, get a hall pass, network, and then do like an interdivision transfer into the investment bank, right? Like that would be an option. So I think if you're late, you kind of would think about it not completely differently, but I think it's an important distinction. And I certainly make the most important thing that I want to say is that you guys should not feel defeated or like you can't do it. I promise you, if you really want to do something and you're determined, it doesn't matter that you're late. It will happen for you. You just have to stick with it. So don't take anything that I'm saying to be discouraging. I really want you guys to be encouraged, because if I can do it with, a 3.1 GPA, no professional network, and the list goes on, certainly you guys can do it too. So I don't know, Kevin, what you would add.
This might be off topic. By the way, when I hire now, I don't even look at where people went to college. I literally look for, and I think this is really important. I would encourage you guys to go find, I know a lot of people are doing internships or, going and working in companies. I think it's so important to get like the real world experience. I think personally for us, when we hire, we're looking at like, what is the skill set that they're bringing to the table or the experience that they're bringing. And because I forgot the original question, so I kind of pivoted to this, but I think it's like incredibly important to make sure you get real world experience. And I think, I guess going back to like the are you late or not late thing, whether you're 20, 21, 22, 23, it doesn't matter in the grand scheme of like your career. It literally is like a year or two does not matter at all, right? Yeah. And I think even for you, like you switched 7 years in and now you're 7 years in to Goldman. You could have waited another 3 years and it would have been cool, Yep. And I think you just need to like, I think making sure you're aligned.
If you retire when you're 65, you work for 45 years.
Yeah.
So, or roughly 45 years. So
yeah. But by the way, do you feel like you're working? I never feel like I'm working.
I feel like I'm working. Isn't it funny the differences in our answers?
But this is because I'm a little slightly delusional and like a little bit crazy, being an
that's because you call me when you need something.
No,
I work for guys like you.
No. I feel like I was lucky to like just be so passionate about something that, again, I could have done this. I think and you guys should too, whether you're an entrepreneur or whether you're going and working in a company, the idea is to find something that like, does it feel like work sometimes? Yes. Yeah, but you love what you do.
Yeah, in all seriousness, like the stuff that I get paid to do is I'm very, very blessed. In a week I could have, a day trip down to Paris for lunch now that I'm in London. The next day I could be on a day trip to Stockholm to meet with some CEO. I mean, like it's obviously you have to sort of come up, sort of the ranks to be able to do that, but it certainly does not feel like work.
Tough life, man. You're like, oh, I'm going to like Como and then I'm going to go to Paris. Let's mess with you.
I was up at 3 this morning.
That's what I'm saying. This is the trade-off. You get to, and I think we're both lucky that our place in our life now, we're able to experience a lot of really amazing things, but we continue to have to work really hard. And we just had to like grind it out in the beginning for years before all of these things, kind of took effect and happened.
So at the risk of turning this into a self-help seminar or something, how much time do you all spend reflecting and thinking on sort of lessons learned, what your gut is telling you, and what are these next 2 or 3 steps down the road?
For what specifically?
for career, maybe life, etc. But let's think career for this crowd. So Derek, you said you always need to be thinking 2 or 3 steps down the road.
Yeah,
How do you approach that? Is it systematic? Is it while you're 2 a.m. staring at the ceiling like Kevin going, oh my gosh? Or
yeah, I just think like, look, I mean, I'll bring it back to a golf analogy because it's a new obsession of mine. Like when you hit the ball, you have to think about where it's going to land. So that's like part 2. And so like in your career, when you make a move, you have to think about where you're going to land and where you're going to go after you land, right? Because the ball in this analogy is going to go somewhere. And so I think if you're not thinking about the next step, you know, fundamentally, you're essentially you're essentially shooting blindfolded with your career. So I would always think about what are you going to do when you get there? What do you think that position or that move in your career is going to allow you to do next? And the other thing is, you know, your human nature will naturally do that for you anyway. So if you don't plan for it, you're ultimately like fighting against yourself, right? So I would say that from a career perspective, and then just from a performance perspective. So my personal sort of performance, one of the things, because I try to take those lessons too, because I think it's related to career, is I think I did a good job of having self-awareness. I know you talked about this earlier, being critical of yourself, because I learned early on that I'm not a naturally organized person. And so I had to figure out ways to manage things like my email inbox and, you know, remembering meetings. And so I've gotten very diligent about making sure I clear my inbox, not every day, but certainly being very diligent about it, because I effectively use my inbox as one of my to-do lists, right? And you know, me and my assistant sit down every week, and we have 2 weeks worth of calendar printed out, and him and I go through every meeting. We're going through travel plans, have I prepared for this, etc. So just like taking time to actually do things, almost to have, to use an accounting analogy, almost to have like your own personal internal controls, because I know that I'm just not naturally an organized person. It's not that I don't care, I'm just kind of a little bit all over the place. So I think those would be the 2 pieces of advice.
Yeah, I would say I try to be as reflective, constantly as reflective as possible. I think it's really, really important to get in touch with your ego, because I think everyone has an ego. And I think there's parts of having an ego that, you know, you have confidence in your abilities and those things that are really great things. But I think the things I've seen a lot are people get held back when they let their ego get in the way. So I think you have to really be self-reflective and check yourself and be like, is this the right decision, or is my ego getting in the way? And I also try to be reflective a lot of like, not about all the things I do great, because there's certainly things that I'm really good at, but I don't need to focus more time on that, right? What is like the checklist of things, to your point, that I don't do a good job at, and how am I going to fix those things? Because you constantly, again, at the risk of making this like a self-help session, you know, you have to constantly just like continue to figure out how you're going to better yourself. All of those traits that you need to get better at are going to get applied into whatever you're doing in business. So you got to be really honest with yourself. Because if you're not, you're just doing yourself a disservice, and it's not ultimately going to help you in your career or in life.
Final question, needs a really short answer. If you were to give these folks advice in one word, that's the short answer part, one word, what would that word be?
I'm going to be like a run-on word. Constant curiosity.
Mine would be enough.
Enough.
Yep.
I would love to dive into that. Maybe that's an opportunity for these folks to ask you more questions as we're headed out of here. Thank you very much for sharing your time with us.
Thanks, guys.
Thank you.
Thanks a lot for having us.
Thank you all for coming, and enjoy business week.